location or a larger factory from a magical shelf?
Need a boost?
There's no need for daydreaming. Get the capital you need to take your business to the next level with NCB SME Boost. Be empowered with the most flexible solution for business owners. NCB SME Boost is specifically developed to support your medium-sized business in any productive sector. NCB SME Boost, the next level is within reach. Apply online or schedule a visit to boost your business.
Good morning, ladies and gentlemen. My name is Andre Gooden. I'm the chairman of the Jamaica Conference Board, and we welcome you on behalf of the Jamaica Chamber of Commerce to the release of the fourth quarter business and confidence indices for 2022. We're happy that you have all joined us today, and I especially want to recognize our sponsors, National Commercial Bank, NCB Capital Markets, grateful for them for helping us to bring this presentation forward on a quarterly basis to make sure that we're all properly informed and equipped to deal with the challenges of the economy. The last quarter, which was the third quarter for 2022, showed a dramatic increase in business confidence, up about 18%. Which was the highest recorded since the second quarter of 2019. At that time, third quarter 2022, there was also an uptick in the optimism about the profitability of businesses. And there was a general feeling of optimism that things were on the improve, although the consumers were a little cautious. So let's see what this quarter holds. We are properly equipped with all the experts here to guide us through. Our presenters from NCB, Dr. Leroy Gordon, Head of Economic and Financial Research and Analysis. And of course, Anya Walker, Vice President, Strategy, Research, Innovation, beg your pardon, and Projects. And of course, we also acknowledge our main presenter, Executive Chairman, Market Research Services Limited, Don Anderson, who will join us for the main presentation. And of course, our panel of presidents today, from the Jamaica Chamber of Commerce, President Michael McMorris, from the Private Sector Organization of Jamaica, Mr. Mitri Siaga, and from the JHTA, President Robin Russell. We look forward to your contributions, and we expect an exciting and interesting seminar this morning. Without further ado, I would invite from our sponsor, National Commercial Bank, Dr. Leroy Gordon, Head of Economic and Financial Research and Analysis, to do his opening presentation. Thank you all for joining us, and please stick with us through the presentation. Morning, Doc. Not hearing you yet. We're seeing your screen though.
Thank you. Thank you very much. Good morning, fellow panelists and attendees all. I'm really happy to be here, as it allows us to hear our joint views on the outlook for 2023. The theme is Forecast 2023, Opportunities in Uncertainty. I am of the view that there are a few things for which we have more certainty for this year. One is on inflation, that I believe will remain elevated through 2023. Secondly, I believe interest rates and the cost of capital will also remain elevated relative to what we have become used to over the past 6 or 7 years. 3, Jamaica's economy will continue to demonstrate positive real economic growth. And 4th, the efforts in the governance and policy space have allowed for sufficient buffers to absorb exogenous shocks. On the first, inflation will remain elevated in 2023. I expect inflation to average in the range of 7 to 9% over this year due to strong food price growth and broad-based pressure from consumption demand. When looking at aggregate global supply chain bottlenecks show some signs of easing. Air freight costs peaked in January of last year and has demonstrated a 30% decline to November. On the other hand, we see where the cost of freight via sea routes continues to increase by an estimated 29% over the same period. But at the same time, when we examine surveys by the Institute of Supply Management, we see where global manufacturing firms report improvements in delivery times, backlogs, and inventory accumulation. Chart 1 shows a graph of a supply chain index produced by the Federal Reserve Bank of New York, which shows that these global supply chain pressures are easing, but remain elevated relative to historical averages. In terms of pressures from food prices, food and beverage prices increased by an average of 12% to November 2022. I expect food price growth to slow only slightly for 2023 in the range of 9 to 11%. And this outlook is influenced by shortages in global supply and the excess demand associated with strong employment here and growth in tourism. The chart below shows these projections. We expect 10.5% for 2023 on food price growth. In terms of financial conditions, the cost of capital will remain elevated. I expect monetary policy to remain restrictive, and financial entities are expected to manage tighter global liquidity conditions. In terms of monetary policy, inflation was 9.9% in October, 10.3% in November, continuing to remain sticky upward. Bank of Jamaica did announce in November the pausing of further policy rate increases. At minimum, I expect the current policy rate to be held, with a potential for a further additional increase in the range of 0 to 50 basis points before the end of 2023. The chart below shows its expectations, and the key here is that we don't expect any reversal of policy rates. For example, the rate at which banks can borrow from the Bank of Jamaica will be elevated to 9.5%. In terms of banking activity, credit demand by businesses slowed since the pandemic. Year-on-year growth in bank loans to resident businesses fell to a low of 4% in December 2021. And despite an expected slowdown in global growth, I expect Jamaica and other Caribbean jurisdictions to demonstrate real economic growth in 2023, as we are seeing still strong employment in our major trading partners and domestically. And these will all go well for tourism and aggregate demand more generally. The chart below shows the annual growth rate of loans by banks to businesses, and we can see where I project this to continue to increase up to 14.5% growth by end of 2023. In terms of economic activity, I think real economic activity will remain buoyant. Despite a global slowing of economic growth, I expect Jamaica's real GDP to expand in the range of 2 to 3.5% over 2023. Here, in terms of consumer spending, the spend by individuals and households is expected to exceed 2022 values. And this expectation is evidenced by data on the use of point-of-sale machines and activity, which increased by 8% over the first 10 months of 2022 compared to 2021. And in terms of the value of spend at POS machines, this was 15% higher than last year. Similarly, when we look at ABM use and credit card use, we see buoyant consumer spending. For example, the value of ABM use reported by commercial banks was 25% higher over the first 10 months of 2022 compared to 2021. The graph shows this activity, comparing data provided by the Bank of Jamaica, 2022 to 2021. When looking at actual real property activity, Jamaica's property market will remain sound over 2023. The value of residential mortgages held on the balance sheets of banks increased by 21% in September 2022. And I expect, well, we estimate an index of property prices, and we see where property price growth is slowing. For example, St. Andrew and St. Catherine demonstrated a 2% and 7% increase in average prices in 2022, compared to 9% and 10% in 2021, respectively. Overall, however, in terms of activity, when examining data produced by the National Land Agency, we see where there is a normalization in the number of residential property transfers over the last year. And finally, closing thoughts, I believe that we have sufficient economic buffers. Predominantly, when we look at employment specifically, Jamaica's GDP demonstrated real growth of 5.3% up to September 2022. And we see improvement in employment across the Caribbean. And we expect this to be maintained through 2023. In terms of international capital, we believe that Jamaica has sufficient international reserves to meet balance of payments financing needs and to maintain stability in the FX market, where we see where gross reserves are 37% above IMF's gross reserve adequacy metric and 100% above of a standard 12-week goods and services import benchmark. We do see some concern and risk as it relates to real foreign investment, where FDI inflows have remained low since start of the pandemic. In terms of our fiscal operations, governance arrangements will remain sound, guided by fiscal policy rules. Government of Jamaica has as well secured greater insurance of future exogenous shocks through arrangements to access IMF's precautionary liquidity line and resilience and sustainability facility if needed. And we believe that capital projects such as the Southern Coastal Highway Improvement Project will also promote long-term growth enhancing opportunities. Thank you very much.
Thank you very much, Doc. Certainly, from all indications there, the outlook for Jamaica is better than that of our main trading partner. So we'll talk more about that later. Certainly a very brief but concise overview of what you see happening. We'll find out shortly if the businesses and the consumers share your outlook. So without further ado, we would ask Anya, the Vice President, Strategy, Research, Innovation, and the Projects at NCB Capital Markets, to make her a few comments before we move into Don's presentation. Morning, Anya.
Morning, Andre. Good morning, panelists. Good morning, our guests online. So my presentation will be the follow-up, I'm sorry, to Dr. Gordon's presentation. He would have presented around, the major macroeconomic variables where we're aligned for the most of the outlook. All right.
Go ahead, Anya.
All right, so I just got a message. I'm sorry that Zoom unexpectedly crashed. Not sure what happened this morning, but that's the technology for you. I'm sharing again. Hopefully you're seeing, hopefully you're hearing me.
Yes.
Are you
yes.
hearing me?
Yes, go ahead.
All right. So we will begin the presentation. Just give me a second. All right. So in terms of my presentation, hope you're seeing it, everything correctly. So in terms of the presentation, in terms of the flow of it, I'll just briefly again outline what are the expectations going into 2023. So profitability opportunities for businesses, financing opportunities for businesses, and then investment opportunities. So what are the expectations? Dr. Gordon and I are pretty much aligned with the addition of me seeing persistent geopolitical risks in terms of the tensions that creates going into 2023. We are aligned in terms of the inflation and interest rate outlook. I have it as being higher for longer, but certainly inflation pressures, as he outlined, will ease, but will remain elevated relative to historical levels. We have increasing recession risk in our major trading partners. The UK is already in a recession, and there is a risk of recession in the US. And then the persistent geopolitical tensions are going to help to contribute to, persistently higher prices for consumers and businesses. That's going to be a major contributing factor. But from a market perspective also, it will also add to the uncertainty and volatility in the various markets, whether it's the stock, bond markets, the financial markets as a whole. So what are some of the profitability opportunities for businesses? Better margins. What we're seeing, although inflation will remain elevated, what we're seeing is an inflection point in terms of oil and other commodities. They're off their peaks. And this bodes better for margins for various businesses that have faced significant pressure. We still expect oil and commodity prices to remain elevated relative to historical levels, but businesses will see some reprieve. And this is a positive for businesses, especially in manufacturing and the distribution sectors. There's a potential for businesses to maintain lower inventory levels. Though uncertainties exist, the supply chain pressures have been easing, which should allow inventory levels to normalize and for businesses to hold lower inventories. And therefore, as the supply chain pressures ease, what we anticipate is that businesses last year would have held significant inventory just to ensure that they have adequate supply of goods to meet the demand and can continue to remain viable. And as the supply chain pressures ease, what we expect is that they'll be able to hold less inventory, and that will free up cash flow and also provide them with more working capital. From the perspective of businesses, we see significant boost to tourism and also entertainment. Jamaica looks at the forecast is that for fiscal year 2022-23, we will surpass 2019 levels in terms of earnings from tourism. That was 4.2 billion, I think, in 2019, and the expectation is that the industry is going to have a particularly bumper year this year, given where we've seen activity so far for this winter tourist season. In terms of cost control and pricing dynamics, the inflation, in terms of the slight fall off in cost that we're seeing, augurs well for businesses that have been working really hard to control prices, their input prices, and just manage their costs overall, and also augurs for better pricing dynamics for businesses. What are some of the financing opportunities? With our expectations that interest rates are going to remain elevated, and based on Dr. Leary's forecast, he's saying, okay, the best case scenario is for interest rates, the central bank to maintain interest rates at 7.5%, and that we're going to see greater pass-through of those interest rate increases that would have happened last year to lending rates. with that outlook, we're saying the traditional financing options may not be as attractive for businesses this year, and maybe what businesses can explore, given greater availability, is non-traditional financing option. So private equity is going to be a big one. Private equity is a cost-effective option for businesses to raise funding. We see a lot more private equity funds, which means that the funding is available. And for businesses that are looking for patient capital, and they don't want that pull on their cash flow, they want the cash flow to invest in businesses, especially our SMEs, private equity is going to be is a viable option now for them because the funding is available. Several funds would have been launched last year, and I do expect that we could see more funds. So there's the availability of that financing. Non-traditional financing options, example, invoice factoring, mezzanine financing. Invoice factoring has been around for a while, but I anticipate that you're going to see more of that, where companies can basically sell their receivables to free up cash flow. Mezzanine financing, which really incorporates a combination of debt and equity. And for companies that really are looking for more customized financing, where you have your cash flow matching that of your businesses, mezzanine financing is going to be another option. And then in terms of the regular public market offerings, the market has shown that it does have appetite for these listings, especially the junior market. We had 4 very successful junior market listings last year, and in 2023 we expect that will remain a viable option for SMEs, but also for companies with attractive valuations. I think valuation is going to be a big driver of transactions, and also companies that come with strong growth prospects. I anticipate that the market is going to be a little bit more discerning now in terms of on the transactions on the larger side. They're looking for companies that can really do well in this environment. And then in terms of on the investing side, what are we expecting? What are some of the opportunities? Last year was a particularly rough year for investors. And I think across the board, a lot of markets, the financial markets overall were down, whether it was the bond market, the stock market. It was a particularly tough year for investors. This year, 2023, there are opportunities in terms of income investing, value and defensive stocks and AI. That's where I think investors will find the opportunities. Investing in short-term money market instruments, given where interest rates are, those returns remain relatively attractive. And in some instances, they offer attractive real returns. Given that interest rates are expected to peak this year, they are expected to remain elevated. 2023 is a good year to start positioning in high quality bonds. Where the bond market is right now, the yields are at very attractive levels relative to the lows of the past, say, 6 or so years. And so investors can begin to pick up high quality bonds. We're looking at investment grade issuers. We're looking at EMs with strong growth prospects, as well as corporates in that space. Local bonds too are offering attractive returns from that perspective, where they are in fact available. In the high interest rate environment, high inflation, and the prospect for slower economic growth will continue to weigh on stocks. And to just the fact that investors will have a preference for fixed income assets given the greater certainty of returns and the lower risk. But we believe that stocks that are from defensive industries, things that consumers demand, regardless, stocks that are from the tourism sector, given the strong outlook for the sector, that those stocks will continue to do well. Stocks in healthcare as well, given that those are in fact necessities. We believe that those stocks will do well. So investors have opportunities there. And then from an alternative investment perspective, we believe that infrastructure and private equity will provide attractive returns in 2023, given, their diversification benefits and return potential. And when you look overseas, you see where investors are increasing their allocation to alternatives, largely because they tend to perform a little, they're not as highly correlated with stocks and bonds, and they are able to provide, relatively attractive returns. And so AI will be an attractive investment option for investors, particularly this year where we see, more alternative investment opportunities being available to investors. So that's it. There are uncertainties in terms of, the interest rate outlook. I know Dr. Gordon said that those are certainties for him, but from the perspective of investors and businesses, these are real risks and challenges that they will have to navigate: higher inflation, interest rates, the risk of recession in our major trading partners and the spillover effects that could have for us, and geopolitical tensions that will periodically give market jitters. But at the same time, within the uncertainties, within the risk, there are opportunities for businesses, there are opportunities for the investing public as well.
Yeah,
Thank you. That's it for my presentation.
Thank you. Thank you very much, Anya. Certainly a lot for us to chew on there. I saw the panelists paying very keen attention to some of the things you said there. So Mr. Siaga, perk up when you said better margins and lower costs for the manufacturers. And I saw Robin sit up straight when you said boosts for the tourism sector. So I hope that means that you consulted them or they share your opinion. But we will certainly
we'll hear their point of view, and it's always good to hear the different perspectives.
Yeah, man. Sure, certainly.
Yeah.
I would ask the panel, the audience, if you have questions for any of our presenters, any of our panelists, you can just type them into the chat, and we will take as many of them as possible during the course of the presentations towards the end. So we're going to hope that we're going to go quickly as possible through, so that if there are any questions that you have for any of the panelists on the outlook, you will have opportunity to do so. Just commenting that we're over, this is the largest audience I've seen on our Zoom platform for about a year. We are about 250 now between both online Zoom and YouTube. So everybody is anxious to hear from our next presenter, Mr. Don Anderson, who will present a summary of the 2022 fourth quarter business and consumer confidence indices. Morning, Don.
Morning, Andre. Morning to all our panelists and to the over 200 persons who are tuned into us, connected to us. May I use this opportunity to wish for everybody, and I wish I could open up my screen, wish for everybody a happy and safe and prosperous, successful 2023. We are coming out of a period in the third quarter of 2022 where the indices, certainly for businesses, jumped significantly. As Andre said before, that was an 18 percentage point increase in business confidence over the second quarter of 2022. Consumer confidence was also up noticeably, and therefore we waited and we anticipated, and we were looking forward to what would take place in the fourth quarter of 2022. So here we are reporting on this particular.
The audio is a little in and out, Don. Check your audio there. Go ahead.
Right. We're pretty anxious to see what the fourth quarter would yield. So here we are, looking at the fourth quarter. Again, we're looking at it against the background of the significant improvement in business and consumer confidence over fourth quarter, over third quarter. So let's look at what we're coming up with. are. For some reason my screen is not moving, tech. Can I switch to your controls and you can move me down chart by chart? For some reason I'm not.
Right. Stop sharing, Donna. We'll just have Paul present.
Yeah, okay. Paul, can you from it, please?
Press on in the meantime, Don. They'll catch up.
Okay. So I'm going to deal first of all with the consumer confidence. A little bit of background to the study. It's always very useful to contextualize the data. So we interviewed between the period of September to December 2022, 600 persons across the island in a nationally representative sample, which allowed us to project the data from that 600 persons to the entire country. So this is a nationally representative sample. As far as the businesses are concerned, we interviewed over 100 businesses, just about 110 businesses over the same period. And the businesses were disaggregated in terms of types of industry. So we do have a pretty good picture of both the consumers and of the businesses. We want to look at the consumers first of all. Against the background of the significant increase in confidence generally, we found that consumers continue to show a high degree of confidence in the way things are going in the country from the perspective of the economy. In the last quarter, for example, overall confidence, consumer confidence that is, grew by just under 2 percentage points, 1.8% to be exact. So that's a 1.8% increase in consumer confidence, fourth quarter over third quarter. We want to look at some of the underlying factors, but we want to compare in general, and we want to use this opportunity to compare the performance of consumer confidence during 2022 vis-a-vis consumer confidence during 2021. So we can get an overarching picture of where consumer confidence is. In line with the above, they're also confident about the current business conditions. The two things we look at right away. Sure, that's the first chart. When we look at current consumer views on how businesses are going and how the economy is going, they're pretty confident about those prospects as well. The data, and if we can go to the next chart, the data does say that the negative perspectives of current business conditions were down by 4 percentage points, and the positive perspectives were up by 3.3 percentage points. So that what we have is an overall situation where people feeling better about current business conditions. There's 12% who felt it was good in 2021, throughout 2021. When we accumulated 2022, that number is up to 15.1%. And at the same time, 22.6% felt during 2021 that current business conditions were bad. That was down by 18.6%, a fall off of 4 percentage points. So that overall, consumers are feeling better about current business conditions, right? What we're seeing on the other side in terms of how they view current jobs, and we're talking about 2022 and vis-a-vis 2021. In 2021, 5.1% felt that jobs were plentiful. And I make the point consistently that consumers have never felt that jobs are really plentiful. In other words, the majority have never felt that jobs were plentiful. So in 2021, 5% of the consumers that we interviewed felt that jobs were plentiful. That moved up to 11 percentage points in 2022. At the same time, whereas 60% in 2021 felt that jobs were in short supply, that number fell to 46% in 2022, again saying that consumers are or felt pretty good, not only about businesses in 2022, but about the current job situation in 2022. We can move to the next chart. So, against the background of those sets of positives, one would have anticipated, therefore, that looking forward, going down the line, that consumers would expect business conditions to continue to improve and would expect that the job situation would continue to improve as well. But what do we see? We make the point that the positive changes over the last 2 quarters have said to the consumers that, we are probably getting to the point where it's not going to move much better, much faster in 2023. And therefore, we see a falling off in the incidence of consumers who believe that things are going to get better in terms of the economy, and an increase in those who believe that it may very well get worse. So the assessment from the data and from our perspective is that it is beginning to, the changes over the last 2 quarters have been so positive that consumers are saying, boy, we believe that some amount of contraction is likely to take place. It's not a significantly negative factor, but that we've grown so much in the last 2 quarters that we expect things to tail off. And we don't expect that same level of growth and level of positives in the economy. The same situation with regard to jobs. They're saying that over 2022, we had a pretty good situation in terms of expected jobs, in terms of current jobs. But going forward, we expect the thing to level off and even fall off a little bit. And that's because of the high movements during 2022. And not that they're negative necessarily or pessimistic about the situation, but given the changes and the significant changes that there were during 2022, they're saying we expect it to taper off and we don't expect it to be as good as it was in 2022. 2022, particularly the last quarter of 2022, was a significant quarter. Significant because that's when we began to see businesses really opening up. We began to see the economy opening up. We began to see people being more positive. And when we come to the business sector, we will see the real impact of that significant positive change in the 4th quarter. Because what it says is that it was almost as if people exhaled. There was an explosion of confidence. And where we are right now is that kind of reality check is taking place. And people are saying, well, boy, that was such a huge growth. We expect it to slow down. So this is what this particular chart is making reference to. This is the conclusion we have drawn from this particular chart, that against the background of that significant movement in the 4th quarter, an 18% increase was unprecedented, really unprecedented. And it came against the background of a loosening of the belt, a relaxation of the tightened situation that people were experiencing, and people were really buoyant. It coincided with the fact that this was the last quarter of the year. Christmas, of course, played a very important part in all of that. So there are 2 factors, a kind of double whammy, that pushed that confidence level upwards. And here we are now in the last quarter. People are looking forward to 2023 and they're beginning to say, well, we need to probably temper our expectations somewhat. And this is what we're actually experiencing right here. So we could move to the next chart. We would expect that against the background of the positives coming out of 2022, that business conditions would be better. Well, we have seen that people are saying, let's be cautious. Let us just temper our expectations. So we would like to conclude that against that background, they would expect their incomes to fall. Now, consumers are not going to readily accept that their incomes are going to fall. And this is what we're looking at here. So despite the fact that they believe conditions are going to be slower or the growth is going to be slower, they do expect their incomes to increase at the same time. It seems a bit of an anomaly, but it isn't. Consumers are saying, yeah, we believe that things are better now. It may slow down a little bit in 2023, but we do expect our incomes to increase. And we can see this from this particular chart. For the 1%, when we looked at it in 2021, expected their incomes, their household incomes to increase. That moved up to 50.1% 2022. And this they're expecting now going forward, there to be an increase in their household income. There's also a concomitant decrease in those who felt it would decrease. So we can see that consumers are pretty buoyant about their own situation, despite the fact that they are cautioning the changes in the economy and in the job prospects for 2023. So what impact does this have really on purchase patterns? We can see that with regard to homes, and these are the three variables that we measure each time: home, vehicle, and vacation. 10% moved to 11%, so that there's a slight increase in the intention to purchase a home. Where the increase has been most noticeable is in the intention to purchase a vehicle, moving from 16.7% to 18.3%, whereas we can see there is a almost corresponding decline in those persons who feel that they're going to take a vacation, 29.5% down to 27.7% in the ensuing future. So it ties in with what I read and what I heard from Dr. Gordon's presentation, and also what I heard from Anya's presentation. There's a certain degree of uncertainty in the economy, which is coming out in the way consumers are looking at the whole situation, the way consumers are looking at business, the way they're looking at their household income, and the way they're looking at their purchase plans. So I believe the topic for this morning's discussion is very, very appropriate and apt, because you're talking about what's happening in an uncertain environment. And people are in a very uncertain environment, and you can see this coming out in the way that they're thinking and the expressions that they're actually conveying to us in the survey. There's a certain amount of uncertainty, and they really are expressing this to us. So if we can go to the next chart. What does this all mean in terms of overall consumer confidence and the trend over the 5-year period? We always look at this over the last 5 years. So we're plotting from 2018 down to 2022. And we can see that consumer confidence averaged 160 points in 2022. And this represents a 20 percentage point movement from 2021. Very positive. Is also better than 2020. Remember, 2020 was the onset of COVID. So we had a pretty good first quarter in 2020, but after that, of course, we nosedived. Went to 140 in 2021, we're up to 160 in 2022. So whereas we can see a positive movement in consumer confidence up to 160, as I said, in 2022, it's not back to 2018 levels of 165.9, and certainly not back to the peak of 2019, which was 180. So if you wish, we are moving upwards, but there's a little bit of a uncertain, a kind of roller coaster, if you wish, in the situation. Where we are right now is that 160 represents a positive movement from 2021, and this was largely driven by the third quarter of 2022. So we need to observe this pattern. We're on, for the moment, over 2 quarters or 2 years, a positive trend. And one obviously hopes that consumer confidence will continue to improve. And we therefore are in the field already measuring the extent to which consumers are in fact reflecting this expected change based on the last 2 years situation. The next chart, please. We like to look at the situation from a qualitative perspective as well. And when we asked, and it goes back to the chart, when we asked persons about the economy and where they felt it was going, there are more people who felt the economy was not going to be better in 2023 than it was in 2022. We then broke that down and we said, okay, of the 30.7% who said conditions are going to be better, what are the top 5 reasons? What do you ascribe this to? And here we're now plotting the top 5 reasons. If we can drill down, we will see the top 5 reasons. 1, more business sectors open. So again, the prime factor that will drive business conditions and improvement in business conditions is that the business is going to continue to open up. 2, people are just hopeful that things will improve as a result. All right. And we can see the 3rd, government is doing their best under the circumstances. 4th, people are trusting in government policies equally. 4th, people think that things will just get better over time. The economy is recovering, and obviously the threat of COVID has been reduced. Now, of course, we're here to talk about, a bit of a resurgence, but we're watching to see that very carefully. And the health authorities will, of course, look and advise us as things develop, if it happens. So these are the top 5 reasons why people believe that the economy is not going to be as good as it was in 2022. What about those who think it's going to be worse? And we look at that 40%, 40-something percent, 42% who believe business conditions are going to be worse. What are the things that are conditioning this? The high cost of living. And when we look at the next chart, we will see that consumers are in fact very expressive about the high cost of living. The high crime rate. This is also a major factor, a major deleterious factor with the business sector, the high crime rate. Government not doing enough for the economy, the 3rd. The 4th, high inflation rate, which both Anya and Dr. Gordon made reference to. And 5, lack of employment. See, people are saying, yes, jobs are becoming more readily available, but there's still a very high level of unemployment. And that is a key factor. So here are the key factors: high cost of living, high crime rate, government not doing enough for the economy, high inflation rate, and lack of employment. Right? So these are the key factors. And the last chart that we want to look at for the consumers, what do people feel about the level of prices that they were exposed to during 2022 compared to 2021? And what we see is that people felt that prices were significantly more than they were the previous year. 15% said prices were significantly higher. 11% said it was moderately so, but a few people felt that it had actually gone down. And that, of course, is reflected by that 2%. So for the large majority of consumers, prices increased, and for some increased significantly, which is the largest single factor here. So people are talking about pressures on their disposable income, and therefore pressures on their ability to just survive on a day-by-day basis. All right. I think that's the last chart for the consumers. And we want to just bear that in mind. Consumers are a little bit uncertain about what's going to take place in 2023, but it's against the background of the significant growth and opportunities that they saw in 2022, particularly so in the 3rd quarter in 2022. What about the business sector now? We have felt that the business and consumer sector tends to go in a way in parallel. They tend to move up and down together. Well, in this particular quarter, we found that after a dramatic increase of 18 percentage points, 3rd quarter, 4th quarter, or 3rd, 4th quarter, coming off the 3rd quarter, that there would probably be a continuation. But I think we're having right now, what we're seeing right now and what we're experiencing right now is a kind of reality check. That 18 percentage point increase was dramatic, was never before seen in any of our quarters. And therefore, what we're seeing in the fourth quarter is a leveling off, a slight decrease in business confidence, down 1.8% in the fourth quarter compared to the third quarter. Against that dramatic increase of 18 percentage points, almost understandable, almost expected. Okay? But what it has done, it has taken us back to a situation where it is now beginning to compare with the periods previously, where we're up to 151.3 in 2019. We're not back there yet, but we can begin to see a general movement going back up to those highs that we experienced 3-4 years ago. That's a general situation. So let's look at the respective charts that fall below these then. What are businesses saying about profits, their current profits, and is it a good time to invest? Businesses are pretty confident about where they are. At the end of or throughout 2021, 13.7% of the businesses that we interviewed said their profits were better than expected. That number almost doubled in 2022 to 24.8% of the firms that we interviewed, over 110 firms that we interviewed, that said their profits were better than expected. Oh, it could have been driven by all the third quarter activity where people saw things happening, the economy is opening up, businesses are thriving, it would appear, against the background, of course, of the previous 2 years. And therefore, businesses are reporting that their profits were better than expected, 24.8%. At the same time, there's a concomitant decrease in those who said it was worse than expected. In 2021, 40.2% said their profits were worse than expected. COVID. The end of 2022, that number fell to 20.4%. Still large, but again, we noticed that more of the businesses said their profits were better than expected than those who said it was worse than expected, which was not the situation in 2021. So we can see a dramatic change in how companies viewed their current profitability. So we would expect, therefore, to be an impact in terms of the mindset about investment. When we look at 2021, 53.7% of the firms interviewed said it was a good time to invest. And we want to make the point that that 53.7% was lower than the pattern over the previous years leading up to 2020, where we had over 60% of the businesses saying it's a good time to invest. That fell obviously in 2021 because of COVID and the challenges and the impacts that COVID had on the economy. That number is back up to over 60. 61.1% of all businesses said it's a good time to invest. And we expect, therefore, to be a concomitant decrease in the number who feel that it's a bad time to invest. And so it is, we've seen it. 39.8% of all businesses said in 2021 that it was a bad time to invest. That number is down to 24.8% who felt it was a bad time to invest. And we can see, therefore, the relaxation, the kind of easing, the exhaling that companies are doing. And they're now saying it's a good time to invest. It's not up to the peak in terms of the investment, the bullishness of companies, but it is getting back to where it was, say, prior to COVID. People are beginning to now think it's a good time to invest. And this is a positive sign. Investment amidst a climate of uncertainty. If we can look at the next chart. There is a
John seems to be frozen.
Am I?
Go ahead.
Am I at the end of the quarter 2021, 56.5% of all businesses said the economy was going to get better. That number fell to 53.1% at the end of the fourth quarter, 2022, representing the year's situation for 2022. 53.1%. So there is a slight decrease, but the majority of the businesses that we interviewed said the economy would be better in 2023. Less so, that fall of about 3.4 percentage points, or 3.2 percentage points. But the fact is that the majority of businesses feel that the economy is going to be better. And as a result, we also see a concomitant fall off in the number who said it was going to be worse. 22.1% at the end of 2021, down to 19.5%. Sorry, end of 2022. What about the firm's finances? Again, there is optimism. Firms are now saying, 80% of the firms are saying, we expect our finance to improve. So generally, we can see a very positive kind of mindset amongst businesses. And similarly, they expect their profits to improve. 68.5% at the end of, or through 2021, moving to 69% 2022. So the businesses are in a pretty positive mood. Their investment climate is strong. They're beginning to look bullish again. The economy, they believe, is good, going to be good. The firm's finances are going to improve, and their profitability is going to improve. So in general, we can see the economy and businesses feeling more positive, despite the slight fall off in business confidence, which we attribute again to the really ballooned third quarter of 18 percentage points. So the reality is kind of hitting in, but businesses are still positive about where they are and where they're likely to go in terms of their finance, where the economy is going, and where their profitability is going. We can go to the next chart. So we can see this reflected, therefore, in the trend in business confidence over the last 5 years. 2018, it was 141.2, the index. That moved up to 143.6 in 2019. And if we could have gone back a few years, we could see that this was a trend that was growing. Then, of course, COVID hit in 2020. So business confidence fell dramatically to 120.5 points. 2021 moved up a little bit to 124.9. And because of what took place in 2022 with the opening of the economy, influenced largely by third quarter data, the business confidence grew to 137 points 2022. So this is the largest single increase in the last 3 years. And it augurs well, and it's consistent with what we saw in terms of the positive inclination and the positive perspectives of businesses with regard to their own finances and their profitability. So this is a good sign. Good sign. I'd like to move to the next chart, therefore. This then confirms what I've been saying. 53% of businesses indicate that they believe conditions are going to be better. What are the factors that are underpinning, are driving this positives? Well, it's interesting to note that despite the fact that businesses are pretty concrete about various things, here, number one reason is that they're just simply optimistic. So again, I believe that that feeds into the notion that things are a little uncertain, but they see trends which are positive and they're being optimistic. They aren't pinning it down to something hard. They're saying we're pretty optimistic, and that's because the pattern does suggest that despite the uncertainties, things are getting better. The second thing is the economy is recovering. Hasn't recovered, it's recovering. Third factor, government policies being put in place. So we notice that both from the consumer's perspective and from the businesses, they are buying into government's policies and they're seeing that some impact is being made on the economy and where things are going. The fourth factor, they expect the tourism sector to rebound. And there's a concurrence, there's a similarity in the mention of the tourism sector. because this is what they're expecting to drive the economy to a large extent over the short term. Tourism sector to rebound. And this has been the talk about it. There's been a lot of information being fed to us in terms of what's happening in terms of hotel expansions, new hotels coming on stream, et cetera, et cetera. And this is something that people expect to drive the changes in the economy over the next year. Other factor, Jamaicans are resilient. Such a strong and such an important factor. It ranks number 5, but you cannot basically play this down. The resilience of Jamaicans and the fact that we have the ability to fight all these challenges. And apparently people are saying, and the businesses are saying, we are going to withstand the pressure and we are going to rebound and we're going to do better. So these are the top 5 reasons why people think the economy will be better. Well, what are the reasons they think conditions are not going to be as good? 20% say conditions are going to get worse of the businesses. What are these drivers? Number 1, are we surprised? Remember, these are questions that we asked. We didn't prompt anybody. These are open-ended questions. We say, well, what is the reason why you think the economy is going to get worse in the next 12 months? And they volunteer their answers. The most important and the single most important factor, crime. So we hope that the authorities are taking note of this, that this is one of the drivers, the factors that will inhibit our ability to grow. Crime. What's number 2? The economy will not improve that quickly. So again, here are businesses being very realistic. These are the persons who don't think the economy is going to get better. 20% who say the economy will get worse. Why? Crime, number 1. 2, the economy will not improve that quickly. 3, continued price increases will stymie that. The impact of the war. People are talking about supply chain challenges. And lastly, last 2 would be less jobs and again, the global trends. So these are the 5 factors that businesses believe will hold back, and stymie growth in business over the next year. Crime being number 1, significantly so. We could move to the next chart. We've been plotting this piece of data for maybe the last, it's the most recent addition to the questionnaire, because on many of the presentations we made, we talked in terms of companies being inclined to invest. The bullishness was very obvious. And questions from the panelists and from the persons connected. Well, where is this growth likely to take place? Where is this capital investment likely to take place? What sector? I've been plotting this from 2020. We want to look at the extreme right column because that talks to us in terms of the dynamism. And we can look at it and we can see where is the biggest growth likely to take place. 46.3% tourism and hospitality. That's where investment is likely to take place. So note should be taken again of the importance being placed on tourism as a driver of the changes, the positive changes in the economy. 46.3% of the tourist sector said we intend to invest and we intend to increase our capital expenditure, capital investment over the next year. And we can see this is followed by the service sector, which is a pretty broad one, personal care, that type of thing. Personal services, 27.7%. If we look at the other end of the scale, finance, insurance, real estate, and business services are down 20.3%. So again, this talks to you in terms of the sectors that say they're going to increase their capital expenditure, and we can see basically where that investment climate is strongest and where it is weakest. Okay. Our next chart talks in terms of something that is very dear to the hearts of businesses and consumers, for the simple reason that our data has shown consistently that the remittance inflow has been a very important part of shoring up Jamaican households, giving them the opportunity to survive on a day-to-day basis. We can look from 2010 when we started to measure this. that number is in excess of a third of Jamaicans receiving remittances from overseas, generally, of course, from the United States, Canada, and the UK. In the last 2 years, 2021, 2022, the number of households that are receiving remittances fell 29% in 2021, 26% in 2022. So fewer households are now receiving remittances, but the Bank of Jamaica data suggests that the remittance inflow is higher. And therefore, the assumption and the correlation is that fewer households are receiving more in terms of Jamaican dollar value, which would be consistent with the inflation, with the devaluation of the dollar. But it is saying that fewer households are receiving remittances. Now, remittances are not saved. Very few households are able to save remittances. I'll make the point again that remittances is not unique to low-income houses. It is more so amongst low-income houses, but not unique to low-income houses. And we suspect, and we can look at the data in greater detail to see which particular socioeconomic sector is falling off from that 34.7% in 2020 to now 25.7%. But our initial look is that it is more so amongst the middle and upper income persons that receive remittances, and that the body of low income persons that are receiving remittances remains virtually unchanged. So that, again, as we indicated, the significant percentage of persons receiving remittances use it to cushion their daily existence. The majority. Very little is saved. So it's a very important piece of data, and we like to correlate that to what the Bank of Jamaica data is saying in terms of remittance inflow. We can look at the next chart, therefore. We are hopefully at the tail end of COVID. We won't need to be looking at this next quarter. So again, it's a discussion that we've been having with the chamber and with the chairman of the conference board, that let's review the situation come next quarter. But since COVID is still with us, significantly reduced, let us take a look at it, and we may not be covering this again next quarter. We hope there's the need to cover this next quarter. But what are the priorities of the government to address given the COVID impact? Reducing unemployment, focusing on the country's health and well-being, opening up the economy even further, control the spread, and improving education and the school system. These are the kinds of things that come back at us every time, and we need to look at it from the consumer's perspective. First of all, this is what they expect government to be doing, and or the priorities that they assign to the government action. And from the business perspective, business is saying government should therefore focus on getting the economy back on track, to continue public education about COVID, reducing unemployment, number one amongst consumers, number three amongst businesses, continue current actions to control COVID, improve the education system, again, something that consumers made reference to, focus on the country's well-being, same thing the consumers are saying. And they're saying SMEs need help. We need the government to focus on getting greater access to funding for the SME. So we can see that consumers and businesses are thinking very much along the same lines in terms of what they expect government to prioritize, given the COVID situation. Happily, we're saying we're beginning to see the back of it, and we hope that we completely see the back of it shortly. But here we are, what people are now saying, consumers on the one hand, businesses on the other hand, and they tend to be saying the same kinds of things. I believe that that's our last chart. Yes, it is. And therefore, we just want to sum up very quickly. The third quarter of 2022 saw a dramatic increase, particularly amongst the business sector, less so amongst the consumers, but noticeably so. And what we're seeing in the fourth quarter of 2022 is a kind of leveling off and an expected kind of dip in business confidence. Consumers continue to show confidence in the economy and in their own situation, but we have a understandable reality kind of check in fourth quarter coming after the magnificent, significant huge increases that we saw in the third quarter of 2022, driven largely by the fact that we began to see the back of COVID and businesses began to open up, the entertainment sector opened up, people began to go out further. And I think we anxiously await the results of the first quarter of 2023. We are in the field. Too early to give any kind of indications. But we're waiting with bated breath to see what comes out of the field, and we will know in a couple of weeks' time what the data actually has thrown up. So I want to thank you very much for listening and hope that we can answer any questions that are thrown at us. And I'm sure there are questions that will be thrown at the panel. So over to you, Andre.
Thank you. Thank you very much, Don. Very, very, very interesting presentation. There are quite a few questions coming in. NCB Caps, there's a business opportunity for you in the chat. Please look for it and take advantage of it. Before we move on, if the presenters could move back to slide 19, which is the slide about the firms that plan to increase capital investment. The press is very interested in that slide. So if you could briefly show that slide again, the one that shows that 40% of the investments of the participants in the tourism sector plan to sink some more capital in the near future. Yes, this slide is a very, very significant slide. And again, Don, the question always comes about the second biggest category is the service, the personal care, you call it other services, yeah. Personal care, etc. We're going to need some more clarification on that somehow. What falls into that other category? I think it is a sign really of persons who have gone into entrepreneurship coming out of the employed labor first and become more entrepreneurship. But if you could just point out to us what other services really comprises.
You're quite right about that. In addition to things like persons involved in hair care, there's a significant degree of new entrepreneurs coming forward in high-tech in terms of different, just opening up businesses. And to a large extent, it relates to the small and micro enterprise sector, okay. Where they're not categorized in terms of wholesale or retail or tourism or transport or storage. And therefore, you're quite right, it's the other sector, other businesses, and they're largely small and medium enterprises.
Okay. Thank you very much. Thank you very much, Paul. You can take that down. Very interesting indeed. Just before I'm going to ask the panelists, just before we ask the panelists, though, I'm going to ask the panelists, their impression of what these numbers are and if the results here actually reflect the reality on the ground in your space. That will be a question for the three presidents. But just ahead of that, we did a look of Vox Pop. This is the third or the fourth time we're doing it, where we ask people in the street and in small business their opinion of what is happening in terms of business and consumer confidence. And I will now ask our media provider to just share those clips for us briefly before we turn over to the panel.
For 2023, we're doing some expansion at our location at Clarendon Park, where we're putting in a bigger kitchen and utilizing the space to put an upper deck that people will be able to go up and dine and also for if you want private functions and stuff, at least you can have your own space. So making it a little more exciting. We're also going to be adding a drive-through to our establishment for customers that don't wish to come out of their vehicles but still want to get our food. They can conveniently get it from our drive-through. So those are the plans for 2023, and definitely looking at opening another location. Consistency is the key, the continuity. And that's what we focus every day here at Murray's, trying to provide our customers with consistency in terms of our meals and our service. And I think we're doing a pretty good job at it. Hence, we have our customers that keep coming, new customers and repeat customers that come back every day to support us. Our greatest lesson for 2022 was perseverance. Well, first of all, we have to believe in our product, believe in the consistency, and continue to provide excellent, authentic Jamaican meals with a good Jamaican customer service. And we persevere and we push on, and customers keep coming. And I think that's the key lesson that we have learned is no matter what is going on around us, no matter inflation, we persevere and push through, giving our customers what we think they want. Our plans have changed somewhat with the market environment because we know food cost in particular has risen maybe about 50% from 2019. Well, we have tried our best to keep up with inflation, but at the same time keep our prices reasonable and affordable to customers, and take a smaller profit and try and push volumes in food sales. And it has worked out really, really well for us. Our headwind for 2023 we're anticipating is a new highway that will bypass our location at Clarendon Park. How we'll push against that, where we've started already. Two things is that we've opened another Morris location in Mandeville to mitigate against any fall off of customers in terms of people passing on the highway and not being able to stop at Morris who would have normally stopped. But we're still optimistic that even though the highway will prevent some customers from stopping, we think that we will also gain some customers with the fact that the highway, you can get to Morris a lot more quickly and with better roads with the highway. We've known that the highway will be coming, and 3 years ago we have started advertising and pushing Morris as a destination and not just stopping while because you're passing. So we have found that has worked really well for us. We have a lot of groups, we have a lot of birthday groups, christenings, weddings. So we have people actually coming to Morris to the location as a destination and not just happen to stop by because they're passing. So we are quite optimistic that even though the highway will take away some of our business, I think we'll also gain a lot of business from the highway. And hence that's where we're even expanding our location at Clarendon Park. So it can be a much more comfortable and greater experience for our customers who decide to visit us. The legacy I'd want to leave for any entrepreneur wanting to get into the food and beverage industry is to believe in what you're doing. You have to believe in your products, in your service, in your establishment. I strongly believe that Morris is the best. I've believed that from day one, and I strive to be the best or to have the best food and beverage establishment, not only in Jamaica but maybe as much as in the Caribbean. And I strongly believe that. And by believing that you have the best product or believing that you want to have the best product, it motivates you to do well. It motivates you to continue. It motivates you to persevere and get over all the obstacles and challenges that may come your way. One other thing I'd love to emphasize to entrepreneurs: a lot of entrepreneurs make the mistake of concentrating too much on money. And I find that when you place all your emphasis on your earnings or your money something gets left behind. Try and focus on what is going to bring in that money. Try and focus on your goods and services. And if you focus on that to get it right and believe in it, then the money will automatically come. So I think that's the number one lesson that a lot of people, a lot of entrepreneurs need to learn. Spend less time focusing on money.
Well, my outlook is that life get a better business can expand the business bigger. Can have a little shop that come off by road and can have a shop running with the 2023.
2023, I'm bright and future. I'm sure no one said a year have a better than 20, 21 and 22. So I look for a brighter year and more business in here,
I would love to go in real estate, because by right, that is really my aim in life. But I just don't have the strength and the current is to jump and cut. That is my aim in life.
One nah lie, only for business opportunity, I love to take advantage of, but don't know the capital that be. It's right now, it's only for party I keep and everything there. Yeah, I see only for people get married, so probably only for them little time after the corona, people meet people and things and married and go on. Right now, so it's right now as a makeup artist, want to take advantage and market himself and himself out there. Take on them opportunity right now.
I just want to improve my thing, my business, put it to the next level. That's it.
For the soup, I would like to expand it into a restaurant and make it more profitable so people can get more, not all out of soup, but also out of things like fish and vegetable and fruits and natural.
Thank you. Thank you very much. Entrepreneurs have spoken. Both the small business and the medium business has spoken loudly there. Access to capital came up a few times. So make note, financiers. Over to the panel now. President McMorris, President of the Jamaica Chamber of Commerce, Michael McMorris. Just your overall comment on the results here. The overview is that consumers remain uncertain, businesses remain positive. What is your take on those results? Is that what you see happening on the ground in the Chamber's membership? And what one thing stands out for you?
Thank you, Andre, and to all the presenters so far. It's been very, very good, insightful. So thank you for all of those. Thanks to NCB as a sponsor. Just before I start, I can say how proud I am as president of the JCC that we are delivering this kind of product, this kind of information. This is our 21st year, Andre. Is that it? And that's just something that is certainly something to be very proud of as Jamaicans. Information is power, and I think programs like this certainly empower our people. And it's interesting to me what the first thing when I looked at that data on the consumer side, the first thing that came up to me is that we have a very astute man in the street. We have a very astute consumer, because the truth is that with the inflationary track unfolding as it is in the economy, and recession, the idea of hard landings and recessions looming, it comes through in the numbers. It comes through in how people are reflecting on what's happening right now. We're getting that boom from the post-COVID sort of relief, and then you have uncertainty about the year to come, because these are real things. I think Dr. Gordon can feel good about what we call the economic science that shows up in the everyday life of people. So I think that's important, because that's empowering. Information is power. People seem to have a good hold on what's going on and what they need to be cautious about. So So I think that was very telling. I think what we hear at the chamber, of course, is that focus on, when does inflation break? So there's always that optimism and there's always that desire from pent-up demand to go forward. But I think businesses, I would posit that businesses have to look at the numbers more carefully and rein in some of the optimism there, because you really don't know what's happening and for the next 12 months, 24 months. And remember that we are primarily price takers in the global economy. And so what happens in the US is a big factor in what is going to happen here. And so, we have to unfortunately have that kind of caution. But I'm pleased to see where the outcomes of 2022 are. And we're seeing that certainly at the chamber. People feel much more positive about those outcomes. There is profit growth and there's growth in the economy, and that always augurs well for businesses. Now, what do you do going forward? That's the real, the big question.
Yeah.
But certainly, with the chamber members and certainly with VM, which I'm happy to chair, we see that kind of sentiment, and we're sort of walking between the raindrops and trying to find our way.
Thank you very much, President. So you share the survey that shows businesses remaining positive, cautious optimism is similar to what your sentiment is. Okay. Mr. Siaga, sir, President of the Private Sector Organization Jamaica, a manufacturer as well. How do you view the results we see here? Is it what you see on the ground? Is that what you're experiencing as well? And what one thing stands out for you?
Thanks, Andre. First of all, excellent presentations by everyone. And the short answer to your question is yes. What has been revealed by, as Michael said, a very astute public is what we are seeing on the ground. I want to speak to the two presentations by the bankers who, and let me preface what I'm going to say by saying that I am not an economist. I am not anywhere near as educated or as smart as either of the presenters. However, I am very, very happy to hear what they have said. Because whilst I hear of the recessions that are impending and the recessions that are on our doorsteps, I can't help but feel a sense of bullishness about Jamaica. Don said it when he spoke about the resilience of our people. We are a resilient bunch. And I feel that it's good that we don't talk ourselves into a recession, that we don't speak about the doom and the gloom. And none of our presenters so did. And I was really happy with that. I do think that there may be some slowing down. And I think that the numbers that Dr. Gordon presented, that inflation will stay around about between 7 and 9%, and that interest rates will continue to maybe rise a little bit. Listen, we are an economy, we are business people that have been through interest rates of high double digits for extended periods of time. So that don't frighten us. What we are is very tough. And maybe those years that toughened us have led us to a place where we can stand the shocks a little better. So whilst I accept that there may be a slowing down, I think there is going to be continued steady growth. I think that the tourism industry, being one of our most vital sectors, the fact that we have heard that investment is going to continue in that sector is music to the ears of all of us. And I am sure under the leadership of Robin that will happen and will continue to happen. I hope that we can get our manufacturing sector and our real, quote unquote, real sectors moving a little better, and get people to concentrate a bit more on them. And I think that the way that we're going to do that is through a logistics-centered economy. We don't want all of our eggs tied to one basket. And not that they are now, but tourism is a real driver for us. And we need to make sure that we spread that risk a little more. Other than that, I'm very impressed with what I've heard and with the numbers that I see online here. Having 250 people on this podcast is and asking some very good questions, as I've seen.
Yes.
It's encouraging to see that people are thinking about investments and thinking about the economy. And I think it's incumbent on us as business people to start to get our employees investing. And there are some creative ways of so doing, and maybe employees, when they're giving bonuses, can give some in cash and some in investments. We need to start people down the road of investing for the future. So these are some of the creative things that I think we as organizations can do.
Thank you very much, Mitri. And on behalf of the chamber, I accept that compliment on behalf of the sponsors as well. We're really proud of this. Now we have input from the poster boy of economic recovery.
Oh boy.
Mr. Russell, sir, what are your observations of what we see here in terms of business and consumer feedback? And is that reflecting of the reality on the ground, and what jumps out at you?
Well, welcome to everyone. And I definitely am seeing and happy that the economy is reflecting the way in this confidence report, because we in tourism are seeing, positive growth. So and I know this positive growth is coming from a place of zero. We are the only economy that literally went to zero during COVID, where we were under complete lockdowns and places were closed. No flights were coming in, so we started there. We truly got to, I would say, full recovery in the latter part, or a little bit after summer of 2022. This is right after the Omicron. We started seeing positive results before Omicron, and it put a dent in our numbers. And very fortunately, after Omicron, we saw an increased demand, both by Jamaicans and foreigners, for our product. People were traveling, people took vacations, people came down just for lunch. So we saw a major influx of business for hospitality. Fortunately, we're back to almost 2019 numbers, which 2019 numbers have been our best year. So we're about 5% out of that. So there is still a 5% growth for us to get back to 2019, which according to even our January numbers, we have surpassed for the first week of January. And in speaking to my hotels, I see that growth carrying through to end of March, even into, I have some hotels that are saying September, up to early September, they're still very, very strong. We're seeing new properties being built, so there is investment in the product. So we are looking forward to, and as that investment happens, then you're going to see increased numbers. So, 2019, I would say that we almost, when I say almost, we almost maxed out what we had. And I'm very encouraged by the increased room count that's happening. I'm encouraged by, we are limited by our facilities, like our airport. A lot of people saw pictures of our airport being, just really overrun. Planes backed up, people backed up. And I know that MBJ has had plans even before COVID, and COVID definitely put a big dent in their plans, or a pause in their plans. And I've heard that the plans have been dusted off. So we're looking forward to airport improvement, which would mean that they can facilitate more guests.
Thank you very much. While I have you, I have a question about food security. You need constant supply. We had some challenges last year, and we have challenges every year because of weather, etc. What is there an alternate strategy that you have employed to directly ensure consistency in your supply outside of importing? What is happening here to help out the small entrepreneur in terms of supplying goods and services, food especially, to the hotels?
So one thing we do have is creative chefs. So you might have a shortage of lettuce, and all of a sudden you see cabbage on the line. So we really do try our best, because what people need to understand is that I am personally coming from cooking. The best ingredient is a fresh ingredient. So there will always be a preference for stuff grown in Jamaica, coming out of the ground and onto somebody's plate within 24 hours. We have had challenges, and with those challenges, we've had to improvise. So some people import, but a lot of it is improvising and using different products that are available. So you might not have, like I say, a salad, but somebody will do a potato salad. And you will see that on our line. We encourage our farmers. What we have noticed is that the farmers are starting to better understand the needs of tourism and have started to produce according. So I would say that we're not seeing a glut of any one product where all of a sudden you have a shortage of tomato, and next month you have an oversupply of tomato. We're seeing a steady supply of product, and because of that, we are now seeing a steady price, which then gives farmers predictability on how to produce and what prices to produce. And that is what we're looking for. Farmers being able to predictable production of crop and predictable selling of product.
Okay, excellent. So the message to the farmers there is that diversify your product. Don't just do tomatoes alone. Diversify your product so you can withstand shocks across the board. Thank you very much. Don, there's a question for you, which I think you started out with this, but possibly this person didn't get you. They want a demographic breakdown of the 600 persons surveyed, and likewise the industries surveyed for the business side. If you can just refresh our memories on that.
Thank you, Andre. Sure. It's very important for people to contextualize the data. From the consumer perspective, we interview a total of 600 persons. Our target is 600 persons. We generally end up with about 630 because we oversample. It's a nationally representative sample. And therefore, when we draw a sample, it includes in that population of persons, or that sample of persons, both gender, various socioeconomic groups, upper income, middle income, low income, various age groups, 18 plus, in line with their numerical representation within the population. And so that when we collect the data, we are able to accurately, statistically project that data because we have drawn that sample from a reflection of the overall population. And we can therefore project that data that we get up to the national population. Similarly, with the business sector, we know what are the respective representations by sector. And therefore, in that 110 businesses that we interviewed, we have a mix of different types of industries, and we come up with an overall sample which is reflective of the overall business sector, and we can project upwards with a considerable degree of reliability.
Thank you. Thank you. President Michael, I have noticed significant growth in the membership of the chamber in the last couple of years. As a director of the chamber myself, I've seen it. The question in the chat is, what are the challenges for startups and small businesses finding some growth this year? This comes from an entrepreneur, and I believe that the growth in small and medium businesses is directly related to the growth in the membership of the chamber. So what do you think about these chances for growth, and what opportunities, what sector?
Yeah, good question. Good question. So, we have this year, which is a transition year. We're seeing good profit growth coming out of last year. So it means that in the business sector, there's liquidity. There is available funding for business ideas that business people may favor, right? So that's where a lot of the interest could come from in terms of empowering entrepreneurs, funding entrepreneurs. I think you have to obviously be aware that the cost of capital, as I think Anya had said, is obviously going to be higher over 23, 24, right? So when doing your projections, you're gonna have to just come to that conclusion, right? Right? You have to be realistic. But as Mitri says, we know how to manage in an environment, or bankers do, or private equity people do, and so take that kind of guidance. I think sectors matter. I think sectors really do matter. Certainly, you want to take some cues from what government is doing as well, right? And so supply side industries. What do I mean by that? Agriculture, for instance. I would expect that the government is going to try and push, agricultural investment, infrastructural investment. So if there are things that line up there, that's good too. But there are a number of development windows. There are a number of entrepreneurial development windows which are going to keep down the cost of capital, because I think we have a consensus that SMEs are very important, and you see it with the private lenders, you see it with NCB, the private lenders. You also see it with the government. So take advantage of those windows. Look at your sectors. Look at where there is real demand. There is a lot of demand, pent-up demand in tourism, as we have seen clearly. Construction continues as well because of that drive. I mean, my day job is sort of working with investors in tourism as well. And while they're cautious, they're moving forward because they know that, and transience may not be the right word, but they know that one day this will end and we will pass through this period. And so if you're spending your time building and you open your doors in 24, 25, that looks good. And so construction, I think, is going to continue to be vibrant in certain areas. And those kinds of areas, I think, are looking for innovation. So it's still good for entrepreneurs. The bond market looks very, very vibrant. We saw some entities raise bonds to on-lend, and so the bond market is vibrant. And as Anya said, private equity, because those businesses have been making some money and maybe looking for expansionary.
Thank you. Thank you very much. Dr. Gordon, you're paying very keen attention. Mitri said he's not an economist, but I think I'll point this question to you, but Mitri could answer it too. With inflation being driven by external forces in terms of food and energy prices, is raising local interest rates the effective way to go? What other policy adjustment would you anticipate which would better support businesses and consumers? That's you, Dr. Gordon.
All right, thank you. I heard Mr. Siaga's comment about not being an economist, but his comments seem to be in advance of mine. But I just want, in terms of inflation, the most recent impetus to inflation have actually been not through higher energy prices, but actually through higher prices of, what we call core inflation. So that is the impetus from general broad-based increase in prices. That's what we've seen. And of course, from domestic food prices. And part of that is related to, as was mentioned by the other panelists, the optimism and the spend we're seeing from consumers, the recovery from COVID, and the growth in tourism. And as well, I can't emphasize the strong employment numbers that have been driving broad-based prices across domestic products. In terms of the question, in terms of interest rates, Bank of Jamaica has employed a number of tools, one of which is to increase the interest rate. And secondly, to ensure that there aren't, as the governor would say, second round effects through the impact of a lower valued currency, which increases the cost of imports, ceteris paribus, and as well through the issuing of bonds to absorb liquidity in the financial system. One of the things that was done that was what we could say is non-traditional that the bank did recently was to actually publish the deposit rates of the various banks, which was, I would say, quite ingenious, with the initiative of incentivizing banks to, view their competition and to increase deposit rates so that there can be more spending, less spending from consumers and more savings. And what we're actually seeing through deposit rates are an increase in deposit rates, really. So, when we look at the different types of deposit accounts with, one for your operations, your day-to-day transactions. When we actually look at time deposit rates and savings accounts, those interest rates on those types of accounts have doubled. And then even when we look further to Anya's area in the capital market space, we see where money market rates have increased in lockstep with the bank's policy rates, etc. So I think the policy imperative of Bank of Jamaica is to control inflation. With regards to supporting consumers and businesses, I take a longer term view, particularly through the fiscal or government space, in which the policy position of reducing public debt to GDP to 60% is the driver to allow for capital for real investment into education, health, reduction in crime, real investment in employment growth for the country for the long run.
Excellent. Thank you very much. There's a question here that I'm going to give Anya this one, but it's a loaded question, but I'll tell you how to answer it, Anya. There's a question about choice to invest in manufacturing, tourism, or financial services. Which would you invest in? I can't give you that one, Anya, but the one that I'll give you, I will say that NCB Cap, there's a lot of business opportunities in these questions. And you guys, between NCB Caps and the bank, you guys need to answer these questions off the air. But the question I would ask you, Anya, is alternative investment. What is happening in the alternative investment space for persons who are looking to diversify outside of fixed income securities, outside of mutual funds, etc.? What is happening that can benefit the small and medium economies? There's a lot of questions in there about small and medium entrepreneurs. So what is happening in that space?
So from the perspective of the SMEs, I would say we've seen an increase in the number of alternative offerings. And that has two benefits, right? It has the benefit for investors because they can invest in these funds, but the funds themselves also in turn take those monies and invest in businesses. And where I see the opportunities for SMEs, there are several types of funds that I think have immediate benefit for SMEs. They're private equity funds to NCB Capital Markets. And I think also JMMB has have private equity funds that have been launched together with the DBJ, right? So that there's joint financing there and there's opportunity for financing for SMEs from these funds, as well as NCB Capital Market also has a mezzanine fund, which really, that type of financing really looks at businesses. So maybe you need patient capital, both are patient capital, because with private equity being the more patient, because there's no need for ongoing financing or monthly interest payments to service any kind of debt, because it's really an equity investment with a trade-off that you are giving up a percentage of your business with the view to growing that business. So you give up a share of the pie to invest to get a bigger pie. And then from the mezzanine perspective, where the financing solution is really tailored to meet the needs of your specific business in terms of it usually typically combines both debt and equity. You may have moratorium, like periods where you don't have to pay interest and so on, or interest gets capitalized and turned into some kind of instrument that can be repaid later. So there is great flexibility in terms of the financing that you can get from a MEDS fund. Of course, the type of business that we get financing from a mezzanine fund is probably a more mature one, more a medium-sized corporation than, say, a small one with the SMEs probably more likely to get private equity financing. I'm sorry. So there are those options that I think that companies can avail themselves of outside of traditional financing, and I expect to see more of those opportunities. There's also invoice factoring that it has been around. NCB Capital Markets has offered it, but we see where a fund is now being developed around factoring. So the opportunities for alternative type financing for business, the non-traditional ones, are definitely increasing. I think it's a good time to be in business. Okay. On behalf of the SMEs in the chat, I will say that they are bawling out for liquidity and capital support. So over to the financiers. Unfortunately, run out of time. So the last question now would go to the panelists. In terms of legislative support, what one thing you would want to see the government do more of to better stimulate growth, economic growth? President Michael, I'll give you the first shot at that. What one thing is missing that we need to do more of from the government side, legislative support, to grow the business sector? You're muted.
That's a big question, right? So I think from the government side, it really is in terms of the fiscal support. Those windows that creates to target particular sectors. I think that's important. That can continue. And on the consumer side, what you have to do is be aware that as rising prices, there needs to be some increased support in that regard, but it can't kind of slow down the economy at the same time, right? That's what Bank of Jamaica is doing. So, targeting that kind of support to the most vulnerable is also very important, I think, at this time. And trying to work on productivity. Dr. Gordon spoke about the long term, right? You have to look long when you're in this kind of environment. And we have to focus on improvements in productivity. We've been going the wrong way for a long time. That has to happen. More support in that regard. And then as I said, on the supply side, getting the supply side done. The IMF support, you can't speak enough about that, because that provides resilience, it provides efficiency in government spending, and those are things that really do goose, they drive the economy, because you get the government spending less on interest rates in the with the multilaterals and so on. It makes an improvement. It creates fiscal space. So those are the first things that come to mind.
Thank you very much. Mr. Siaga, what additional government support do you think the private sector would need to push that and maintain the economic growth that we're seeing?
I will mention two things. One, I think that we need to get the bureaucratic red tape out of the way. And two, I think we need to develop our economy as a logistics-centered one and take advantage of the greatest natural resource we have, which is our location. I think if we're able to do those two things, we would see a different journey.
All right, thank you very much. Over to you, JHTA President Robin Russell. Your take on what one thing else you would need. I mean, you have plenty already, but let me hear what you think you might need to kickstart and to keep the momentum right throughout the year.
I think the biggest impediment to tourism growth is crime. And I would like to see Enhanced Security Measures Act be implemented. I really think that if we were to cut down on crime, we would we would just explode as an economy. And then I would like to see the continued infrastructure development that tourism as a whole can reach into different parts of the economy, different parts of Jamaica, that people can drive from Montego Bay now within a short space of time and end up at Mr. Murray's place having his world famous curry goat. I think that is when we will truly see the benefits of tourism, when tourists can go in every little corner of Jamaica and enjoy what Jamaica has to offer.
Thank you. Thank you very much. This has been fantastic. I thank you for staying with us as long as you have. The audience has been very interactive and a lot of questions in there. Sorry we couldn't get to all of them, but we have busy people on this chat who have to go back and focus on making consumer and business confidence even better. So I would first like to certainly thank our sponsors, NCB Capital Markets, National Commercial Bank. Thank you to Dr. Gordon for his presentation. Thank you to Anya Walker for very insightful, both of you, very insightful presentations. Of course, right at the top, we should also mention Don Anderson, who continues to do the hard work to bring these numbers to us and are guiding us in making our financial decisions. Special thanks to the three presidents, President Michael McMorris, Jamaica Chamber of Commerce, President Mitri Siaga, Private Sector Organization of Jamaica, and President Robin Russell for the Jamaica Hotel and Tourist Association. We thank you all for staying with us. Enjoy the rest of your day and continue to follow us as we continue to bring more value to the market through this partnership. Have a good day, everyone.
Bye-bye.